So, financial modeling and valuation has emerged as one of the most promising careers for chartered accountants, cost accountants, MBA finance, engineers, graduates, CA inter. So, what exactly is this thing called financial modeling? Where exactly are people required here? What is the entire thing? So, let us try to understand. So, let's say, when demand supply equations really get erratic, you have a sudden emergence of a COVID crisis which is not conducive to business operations. There are erratic swings, and corporates need to have a dynamic mechanism where they want to understand the likely impact of the market turbulence on their fortunes. So, for example, this corona crisis, which has happened, as a company, I would want to understand that okay, I am Inox, I am PVR. Now, if people don't step into my multiplexes for the next 6 months, how will I work? Thus, I need a financial modeling. So, one of the most possible uses of generating the financial modeling is the revenue and the expense forecast. As the owner of the company, as the board of directors of the company, I really want to know that okay, I have this many plans of spending this many thousand crores on expansion of new multiplexes. Is this the right time? Plus, I have an existing debt obligation. If I do not service this, I will become an insolvent company. The companies will be forced to get into a liquidation or will be put into the corporate insolvency resolution process as per the insolvency and the bankruptcy code. So I need a financial model to give me crucial insights for the decision making and all the possible whether it is a base case, a optimistic case, a pessimistic case, the worst case. How will my profitability come? So like the worst case for Inox PVR will be that no one comes to multiplexes for the next 6 months. They are completely doomed, and they might essentially be on the verge of a complete crash crunch. They don't have money to pay salaries, rentals. They've already invoked force major that way. So we have to build calculations depicting a real life situation, quantifying the inputs of an operation, the outputs of an operation, and this calculation works as long as the quantum of variables and scenarios are limited. So you can continue to add variables and scenarios. It takes the shape of a model. So in a nutshell, a model is nothing but a series of calculations. Whether it's simple or complex, that's a separate thing. So there can be very, very complex models, 100 sheets, 10,000 line items, so 3 million data sets. Yes, they can be simple models, maybe your personal finance model. They can be structured in a particular fashion so that it is comprehensive, because most corporates, investment banks will want you to make a financial model, but they don't want you to have the monopoly of the model. They will want you to make it in such a manner that someone else also comes and is able to work on this model. So it should be that comprehensible. So one of the features of financial model will be that it will be very comprehensible. So when is financial model needed? When the decision is complex, the very high risk. So example, I am wanting to spend 10,000 crores to acquire a company. Facebook is investing 40,000 crores to acquire a 9.9% stake in Reliance Jio. Risks are very high. A decision is complex. You don't have any visibility on the results. And you could have two options, maybe invest in Reliance Jio, maybe invest in some other startup in Europe. How do I compare the two possibility options and how sensitive it is? For example, if it's like a Swiggy or a Zomato into food delivery, there are a lot of sensitive parameters. How many Indians are going to upgrade into the next lifestyle? They will have smartphones, they will order food online, they will think of downloading Zomato. What will be the market share of Zomato? How many will be the frequency of the food ordering? So these are sensitive parameters, and accordingly the fortunes of the company are going to change. And you don't have any reliable rule of thumb. Any startup, for example, whether it's Zomato, Uber, Ola, Amazon, Flipkart, there are no rule of thumbs because humanity hasn't seen any sort of an e-commerce startup of this scale. So how do you actually forecast? Now, an individual is not required to have any formal degree for financial modeling. Commerce graduates, CAs, CFAs, engineers, MBAs. Yes, if you have this, people feel that okay, this guy is already a graduate. He's got a CA inter, a CFA, and trust me, even engineers do financial modeling as well as people with a finance background. So never think that you have a monopoly over PL, balance sheet, cash flow. So in MBA, my batchmates who have done accounting have got lesser grades than the IITians who have learnt accounting on campus. They've done it better. Every computation is not a financial model, and not every C or an MBA can prepare a financial model. So very, very niche skill set, takes a lot of effort to prepare a financial model. When is financial model needed and what is the outcome of it? You can tell the management that, hey, look, the market has shrunk. So only 50% people are going to buy passenger cars post Corona. You need to step up your marketing efforts, or maybe go for cost rationalization if you are a Maruti, and maybe scale down your capex, prioritize between two projects because you have limited cash, only one of the projects you will be able to undertake. How much investment capital is required? Maybe look for additional funding, maybe go for a rights issue like Reliance has gone. Undertake production cuts as may be required, because unnecessarily you're going to keep producing cars people are not going to buy, because your predictive analytics says that cars are not going to be sold in the market. So you prevent that inventory buildup beyond tolerable limits. The measures as outlined above could vary according to the unique dynamics of the business. If you create a financial model, the management can cope up with the uncertainty. You at least know that in which range. So if you have been earning 1,000 crores per annum, you know that in this uncertain times it could range from 200 crores to 800 crores. So that's the range in which your fortunes are going to swing. Companies require robust financial models to help them analyze the complexities of the geography. So when I was in Tata Steel, I used to prepare financial model for Tata Steel Europe, which again comprised of United Kingdom, Netherlands, and then Thailand, Singapore, Indian operations, and then consolidate all of them. So multiple geographies in which businesses operate. Oyo Rooms operates in so many countries. It needs a financial model for that. You need to consider multiple currencies in the projections: euro, dollars, Swiss francs, Chinese renminbi, Thai baht, Singapore dollar, INR. Evaluate varying capacities, capacity utilizations, so that you know that yes, this is going to be the optimum capacity under varying industry demand supply situations, etc. So it's a part art and a part science, and there is some theory to this. The process should be deliberate, thoughtful, and you need to have that sort of a confidence that yes, when people are going to grill you on those financial model, you need to have that airs of a Steve Jobs kind of a thing. Your model should be in the same breath similar to understand, and the intellect and interest lies in making a model which can be understood by everyone, scalable. So if the company moves from $2 billion to $5 billion, does your financial model have the capability to handle that? If he adds another line of business, can you handle that? And very robust, so that it can accommodate as many changes as required. So the idea is that if you've got a power plant, before you actually construct the power plant, you put up a miniature working model for the power plant that shows the construction of it or something. So it's a simplified representation of a company's performance. Typical financial model will have interest calculations, balance sheet, cash flows, P&L, will have various sources of inputs, macroeconomic factors, GDP growth rate, currency, crude oil. So all of these host of macroeconomic inputs get into typically into a financial model. So you populate your revenue, cost of goods sold, operational expenses, and then the three income statement, P&L, cash flows, and then balance sheet, and then capital expenditure. How much is your capex plan? Working capital. So you build up these three forecasted financial statements. So where are people required in financial modeling? DCF modeling, you do a discounted cash flow. You do an M&A modeling where you learn investment banking and corporate finance professionals modern mergers and acquisitions. So Flipkart being acquired by Walmart, Facebook investing in Geo, all of these are M&A transactions, right? So how do you build a valuation? How do you discount the future cash flows to arrive at, okay, how many $1 billion I'm going to pay? You can have transaction comparables that, okay, if a deal has happened in the cement industry in the last 5 years, these XYZ are the three deals, and accordingly, this deal should be valued at EV to EBITDA of this multiple. Trading comparables, and then LBO modeling. So if M&A, a lot of buyouts are leverage buyouts. So example, Tata Steel's acquisition of Chorus or Hindalco's acquisition of Novelis were leverage buyout, where you take debt on the books of the subsidiary. So that is something that we buy. Skills in financial modeling. So application is very huge. M&A, capital raising, internal planning, budgeting, forecasting, investments, valuation. Scope further increases when you start looking at ad hoc analysis like sensitivity analysis, scenario analysis, capital rationing, return on investments, IRR. So if you have financial modeling skill sets, you will be required in private equity, in investment banking, in corporate development, equity research, FP&A. Everyone wants you, whether you are a global firm, a boutique firm, a financial service, domestic brokerages, private equity, AMCs. Everyone needs a financial modeling company. So the global or the Indian firms, Bank of America, Citi, Deloitte, EY, Grant Thornton, UBS, Deutsche, JP Morgan, KPMG, Nomura, Ambit, Axis, Crisil, Elara, IDBI, name it, and everyone, Duff and Phelps, GS, HSBC, boutique firms. So there are so many boutique investment banking firms, Lodha Capital, Singhi Advisors, Intellicap. They actually do transactions. Centrum Capital, BMR Advisors, Avista. Everyone requires financial modeling skill sets. In financial services, you have all these KPOs, ranging from iMarkserve to SmartCube, Thomson Reuters, Transparent Value, Tres Vista, Aranka, Adventity, Amba Research, eValueServe. Everyone requires financial modeling. Investment banks, the host of investment banks, EY, Rothschild, Kotak Mahindra, so the Indian ones as well, in ICICI Bank, Axis, SBI Caps, and then the big bulge, JP Morgan, the Deutsche, Goldman Sachs, Credit Suisse, UBS, Morgan Stanley, Merrill Lynch, Barclays. Everyone requires people who are very well versed with financial modeling and valuation. So you have people who are recruited in all of these big things. But what I'm saying is that okay, you are not going to do one course and these people are going to recruit you. You need to have those skill sets developed over a period of time. Maybe you start off with a boutique firm, get those skill sets, and then upskill yourself on the shop floor, which is the desk in case of a white collar job, and then apply to these places. Maybe then in course of time acquire an MBA or CFA, because that signals to the market that you are very good. So host of these companies require people with the financial modeling skill set. EY, Grant Thornton, Deloitte, PwC, KPMG, BDO, Singhi, IHS, Moody's, SG Analytics, Genpact, Barclays, Sutherland, JP Morgan, Copal Partners, Duff and Phelps, Nangi Advisors, Care, Fitch, Crisil, RBSA, Ellie Research, eValueServe, Resurgent India, BlackRock, WNS, Mazars, Kopalamba, Desai Haribhakti. So if you search on Naukri as well, you get 716 financial modeling jobs, and they are spread across the country. 228 jobs are in Delhi, 206 jobs are in Mumbai, 111 jobs in Bengaluru, 118 jobs in Gurgaon itself. And the salary range is also good, 10 to 15 lakhs, 6 to 10 lakhs, 3 to 6 lakhs, 0 to 3 lakhs, depending on your experience, depending on the other degrees that you have along with financial modeling. So host of these companies, RBSC Advisors, Transaction Square, everyone, name it, and those people need those skill sets. So that's why I would rather recommend that you do a course of financial modeling. I also have a course on financial modeling. It's available on Udemy. The links are given in my LinkedIn profile, and you can as well do this course and get a clear understanding of how, for example, if you're part of Avendus, which is a boutique investment banking firm, it makes transactions in real estate, healthcare, digital. So 1999 it was found, and it has got Farm Easy, Nephroplus, Zivame. So each time it made these investments, it needed a financial model so that it could value them. So these skill sets are always going to be there, whether you are into an investment bank, whether you are on the corporate side in a Tata Steel or Hindalco or Reliance Industry. Everyone who makes investments, everyone who prepares budgets in a company, everyone who makes fundraising. So your bankers are going to ask you for the forecasted cash flows. Your credit rating agencies are going to ask you for your forecasted cash flows. So a investment banking job, a valuation job, insolvency and bankruptcy job, all of these players just want you the moment you have the financial modeling skill sets out there. So that's why it's very important to have these skill sets of financial modeling. Hope you had great learning here. Thank you so much.